Good evening, traders. It's Sunday, the 8th of March. Welcome to this week's Market Outlook. We're going to be running through some of the usual Forex pairs that I cover when watching my charts for the Darwinex account that I'm trading, as well as a few of the other commodities and major stocks. Might look at the S&P. And the Dow Jones, things like that. Anyway, without further ado, let's start by looking at the US dollar Swiss franc. So this is actually one that we are in. So if I just zoom out and show you the weekly chart, we can see that the MACD histogram is showing that it's in negative territory. That means that we are looking for shorts according to my system. That's my trend filter, basically making sure that I'm on the right side of the market as much as possible. Obviously, you can only do your best in terms of reacting to the direction, and that's the filter that I use. There's lots of different ways that you can filter that. So the weekly chart, you can tell that it's been going down in a pretty consistent rhythm, tends to go in waves, and then more recently it's sort of consolidated a bit within this range here that we're looking at, and then we saw a breakdown beneath that range, which was great. And then it went into a wedge, and we were essentially waiting for some movement to the downside out of that wedge. What happened was we had the weekend where the US and Israel started strikes on Iran over the weekend, and the market wasn't quite sure how to react to that. So when the Asian session opened on that Sunday night, the US dollar spiked upwards, and we also had a situation where the Swiss National Bank was considering fiscal measures. I can't remember what it was they were doing. What was it? The Swiss National Bank were, I don't remember what it was they were doing, but something that would essentially be bearish for the Swiss franc, and so we got this sort of big surge upwards. But really, it was almost like a false surge, and it met up with the bottom level of this consolidation range. And it rejected and came back down to the same levels that it was at before. The fact that I can't remember what it was that the Swiss National Bank were doing shows you just how much I care about the fundamentals when it comes to fiscal policy and central banks and stuff. I really don't take it into account on my trade decisions. And it goes to show that you don't have to be super clued in to sort of geopolitics and macroeconomics in order to be able to trade. Yes, I think it absolutely helps, but as a retail trader, it's my opinion that you're essentially just getting second dibs on the market. You have to react to what price shows you, because whatever you're seeing on the charts, that's what's happened in the news, and that's what the market has already decided of it. What you're trying to do is manage risk according to what the price is showing you on the charts. And that's really where I sit on it. Anyway, I digress. Let's get back into this. So that's what it looks like on the weekly chart, and that was what happened last week with the Swiss franc versus the US dollar. If you look at it on the daily, you can see a little bit more clearly the picture of what happened. So you've got this big candle of it sort of on Monday bursting up through this channel. It was almost like we got a false breakdown on the Friday, and it was like, yes, come on, let's get in. But then it went and bounced all the way back up, so that probably caught a lot of people out. You probably get a more accentuated candle here because a lot of stop losses got hit, triggering buy orders, and price got all the way back up to this level here that we already had marked out. You can see it's been rejected here, consolidated a bit here, and then again rejected here to the other side. At that point, it also coincided with the 50 simple moving average, and these are on the daily, so it's the 50-day moving average and the 100-day moving average, and started to move a bit lower. And it was at that point really where we got this sort of rejection off that, coinciding with the 50-day moving average, that I looked at the 4-hour chart, and it was on the 4-hour chart that I decided to enter, because we got this doji candle here where you have a long wick and a little bit of price action in between, in the middle. Basically, that's the visual representation of indecision when you get a doji candle like that, especially when you get a doji candle at an HKL, a horizontal key level. That is something which I made up, and something which Charlie Burton always ribs me for, because I sort of made up my own acronyms. But at that point, it's showing indecision at a key level, and we got a nice bear candle afterwards. It's not really a bearish engulfing candle, which is a very good indicator of direction. But it was enough for me to say, right, we've got lots of different levels of confluence. The trend is going down overall on the weekly charts. It's rejected off this key level. The reason that it surged upwards before that is a short term reaction to both the military strikes and whatever it was that was going on with the Swiss National Bank. And then very clearly the market said that it does want to try and get back down again. So I opened a trade and I placed 2 stop losses, one just above this key level here, and then one up here, which looks a bit random on the 4-hour chart, but on the daily chart you'll see that it's above the 200 moving average. And yes, that looks a bit conservative, and I probably would agree with you, but the reason I do that is just because if the price comes up here and it has another stab at trying to shake people out and see how high it can go, I want to know that I'm absolutely going to remain in this trade until that trend has finished. And the point where I deem that trend to have finished would be if it crosses up above that 200-day moving average. And let's just zoom out and have a look when it was last above it, because that's why I deem that to be such an important level in indicating whether the trend is over. And it wasn't until it was consolidating, which tells you a lot about how important it is, on the 3rd of April last year. So it's been below it since then. And the market's been moving down since January last year. So for the whole of last year, the US dollar Swiss franc has been trending downwards. For a large part of that, it was consolidating and allowing price to catch up. And, there's every possibility that it might pop back up again. But right now, I feel like these are 2 strong positions, which if price is going to go down, allow me to be in the trade. One with a tighter stop loss, giving me the opportunity to have a better risk reward. And one with a much more conservative stop loss, but that still keeps me in the trade, and able to sort of ride that trend for as long as I can, really. So that's clearly my take on the US dollar Swiss franc is one that we're short. So that's that. Let's move on to the Aussie dollar, US dollar. Aussie dollar is normally quite sensitive to commodity news. And clearly there's quite a lot of commodity news at the moment with how much oil has been affected. What's quite curious about the oil situation is that obviously the geopolitical situation affects the Straits of Hormuz, or however it's pronounced. And that is where a lot of the seaborne Brent crude oil is transported, not the US oil, not WTI. And so essentially America has got its own, they're sort of oil independent in terms of their reserves. They've got enough, they can control the manufacture and storage of that themselves without needing to rely upon any seaborne oil being delivered to them. So it really shouldn't affect US crude, WTI, but it has affected it in almost identical fashion to that of Brent crude, which I find curious, and maybe any of the economists amongst us might be able to help shed some light on why that is the fact. But yeah, I'd be interested to know. Anyway, going back to the Aussie dollar, US dollar, it has been going up for a long time. Again, let's start by looking at the weekly charts, which is what we should always be doing with a top-down analysis. For a long time, this was heading down. Its sort of fortune started to change around, well, let's call it this the low, April last year, and then it started to have a nice run up. It recently sort of stalled a little bit, and it kind of needed to stall a bit because it was tearing away, and I wish I'd been in on this trade sooner. There's quite a nice trend line here, which it's returning to on the daily chart, but it was the 4-hour chart again, which was the one that I sort of got an entry in on this long, and it's consolidated here since 26th of January, more or less. Quite big sort of range at this stage, at this early stage, and then slightly narrower, and more recently it's declined pretty much since pretty much since the war began. So it found its way back to the 200 MA, and it rejected with a big pin bar candle here. This long bad boy here. What that basically shows you, that candle there, is that price really wanted to come down, but ultimately it ended up back at the top, and that's just telling you that that's where the market wants to be. It doesn't want to be the other side of this MA. It tried, it failed, and that's a pretty strong signal that overall there are more buyers in the market than there are sellers, as much as it looks like it's trying to go down. So I decided to enter on that pin bar. I mean, it's not quite a pin bar, but when you think about what's happening, when you look at a Japanese candle, that is essentially what is happening there. And it's basically gone up and down for a little bit for now. We've got one stop loss below this candle with a bit of a buffer, and again below the 200. And then we've got one additional stop loss below this trend line that we saw on the daily charts just here. So we'll see how that goes. You know, I wouldn't be surprised if it continues to stall for a week or two now. Maybe it'll join up with the 50 moving average or the trend line, and then hopefully shoot back up again. If it hits both my stop losses, then, you know, the trend is over and we reassess. The next position that I'm in is the US dollar CAD, and we got a fantastic short candle breaking down through this wedge on the daily charts, part of an overall downtrend. The MACD is in negative territory. The only reservation that I had about entering this trade was that it is a third short US dollar trade, but the amount of exposure that I'm putting on this is pretty low. I'm risking about 0.4% per trade, entering in 2 positions each time, so 0.8% of my portfolio at risk in 3 separate positions. So, you know, 2.4% in total at risk. It's not a huge amount, really. I can sleep at night with that. I'm probably not going to be entering any more US dollar shorts. And obviously you're going to get these setups because they're driven by the fact that the US dollar is not performing as well. And that really flies in the face of what's going on with the war, I would think, because if inflation is going to rise, then interest rates are probably going to be, or at the very least, kept the same, which is negative news for the US dollar. So it's interesting. Which is positive news for the US dollar. So, which is interesting. But I am just following the charts and trying to stick to my strategy. And this is such a clean setup. And it's one that actually I looked at with Charlie in our recent coaching video, and I hadn't yet taken this position. And that evening it broke down through it, and it did exactly what I said I was looking for. And so I got in again, taking 2 positions, one with the stop loss just above the candle. Let me just look at the 4-hour chart. Yeah, just above here, and with a take profit here. So it's more or less a 1-to-1 trade. At that point I will trail my other stop loss down. So I'm, bearish on US dollar Swiss, I'm bullish on the Aussie dollar US dollar, I'm bearish on the US dollar CAD. And now I'm just going to bash through some of these other forex pairs quickly. So we've got the pound, Japanese yen. I should be looking for shorts here, but currently the market seems determined to push ever higher, has gone through the 200 MA. It is approaching this key level here, so I might be looking for some sort of consolidation or reversal around this level, and then hopefully we might get a continuation. That's nice, isn't it? I need a bit of practice if I'm going to use that brush tool like Charlie does. Something going in that direction. Pound dollar, wild. Let me just look at this on the weekly chart. Pound dollar, it's a bit like the euro US dollar for me at the moment. I want to be long. My system's telling me to be short. But I don't want to be shorting it yet. All the moving averages are facing up on the weekly. On the daily, it's a bit mixed. There is this nice trend line coming down. So it's possible that, if we got a nice bearish engulfing candle off this trend line, the 50 starts to cross below the 200, then yeah, I can see myself getting into that, into the short side for sure. Probably quite similar with the euro US dollar. Yeah, it is. Yeah. So similar stance on both those two pairs, cable and the euro US dollar. Euro pound, I really would like to get long this, but it started to go because there was a nice long-term trend line with loads of bounces, and it looked like the weekly MACD was going to cross up here, but it hasn't because it's just decided to turn away. So right now, I'm sort of monitoring it to see if it will set up for a long. I can't remember. Did I see some divergences on this one? Let me just have a quick check. One of the pairs I was watching where there were some divergences on one of the main time frames. I can't see any. But anyway, right now it's being defiant. So I'm sat out just watching that one steadily. US dollar, Japanese yen. Interestingly, I mean, I should be looking for shorts on it, but if you look at it, it's been completely tearing away. Actually, sorry, I'm on the 4 hour, aren't I? Let's just move this up here. Let's have a look at the weekly chart. Yeah, so I should be looking at shorts, but it definitely looks more like I should be looking for longs. Potentially, this would be a good hedge for my current account because I'm short US dollar on 3. I would very much like to be able to find a long just to hedge a little bit, but my system says that I have to follow my trend filter, and that is in the red territory currently, so should be looking for shorts. The euro Swiss franc, definitely should be looking for shorts here. I feel like it's difficult to get into this trade right now with how much it's moved. Potentially I could look at a pullback, but right now it's just not one for me. A pullback to somewhere around here, around the 0.92 level, might be tempting, somewhere around here, to get into it again on a sort of continuation. So that basically is my analysis of the forex pairs that I tend to monitor. Let's just have a very quick look at the S&P 500 to see the general state of the market. Both the FTSE and the S&P 500 had a bit of a pullback this week, as you can see. And one of the things that I think is the most relevant to look at with the S&P at the moment is this. And it's this huge divergence that's been coming all the way down here. Look, that's going down. And look how much that price is going up. So basically, from May last year, we've had a MACD divergence. Basically, the momentum is slowing down in the market, but the price is creeping up. And it does feel like it's well due a pullback. It's flattened out here. Things are starting to flatten out. The geopolitical situation is unstable, although that doesn't always reflect what happens in the markets. So yeah, it's about 800 different divergences going on to the short side. So I'd be careful with that. I'm not saying you should short the market by any means. I'm not saying that you should do any of this. This is purely my own analysis, of course, and you should do your own. But I always find it's interesting to see what other people do. They do it. The FTSE has just been on a complete tear. It's only recently that it's had a little pullback, and it's now at the 50-day MA. So it'll be interesting to see if it finds any resistance there, any support, and continues up. Probably last thing to look at is oil. Oil is up. Wow. So on Friday, it just went berserk. I think it was just continued strikes, I think the rhetoric from both sides was that they were not going to de-escalate. Basically, after that initial gap up and then slight consolidation, the market was like, well, is it going to get any better? No. Came the answer, and very much shot up. So yeah, it's a pretty wild chart that I wouldn't be trading it unless you very much know what you're doing. Bitcoin getting absolutely trounced, probably going to go to zero. I would sell it. No, only joking. This is a good level, isn't it, for Bitcoin, pairing up with old highs, areas of consolidation, coming back up to the 200-week MA. Lots of good levels there. A bit of the Wild West, really. Bitcoin doesn't seem to correlate to anything that I can see. Gold, I mean, yeah, it's slowed down recently, but still doing really well. Been pretty slow considering everything that's going on. Normally it acts as a haven in times of uncertainty, a safe haven, but really hasn't reacted to that in the same way. It's just been a little bit sort of asleep. You never know, maybe it'll take off. But I did read some analysis somewhere that that's not uncommon, and that does happen quite a lot with gold in terms of how it reacts after quite sort of dramatic news is released, where you would imagine there's going to be a huge market shock. It doesn't always just suddenly shoot up, so it's not as reactive in that way. Anyway, those are my 3 positions that I'm currently holding. That's my take on the sort of major market news, and I hope that you found that interesting. And you know, if you're enjoying my my videos where I go through some of these, then please do hit like on this, because it definitely helps in the algo. And yeah, subscribe to the channel and leave me a comment. I'd love to hear from you guys who are actually watching the videos, what you want to see, what you're enjoying, and just be nice to know that there's someone out there and I'm not just talking to myself. So thank you for watching. I'll catch you in the next video, guys. Have a good trading week, and yeah, see you soon. Bye.